What if I told you that some of the wealthiest people in America, the CEOs, the doctors, even the YouTube millionaires, are using a retirement account? Not to save money, but to legally dodge taxes. Sounds crazy, right? Now picture this. Two people retire at 60. One spent decades working hard, saving in a regular account, only to get hammered by taxes in retirement. The other? She planned ahead. She's withdrawing tax-free, enjoying her $1 million portfolio, and not giving the IRS a single extra cent. So, what's the difference? A Roth IRA. And here's the thing. It's not just for the rich. It's not complicated. And it might be the smartest thing you ever do with your money. In the next few minutes, you're going to learn how the Roth IRA works, why it's so powerful, and how you can start using it, even if you're not rich yet. Hello, everyone. I'm Loopvest. Let's start simple. Meet Emily. She's 26 years old, makes about $50,000 a year, and just landed her first real job. She's not a finance nerd, but she does want to retire someday without living off ramen noodles. A friend tells her, "You should open a Roth IRA." She goes, "What's that?" Think of a Roth IRA like a tax-free backpack for your future. You fill it up with money you've already paid taxes on, a little at a time, and then, years later, you can take it all out, completely tax-free. Let that sink in. No taxes when you invest, no taxes as it grows, no taxes when you take it out. Here's how it works. First, you contribute money after tax. So unlike a 401k, there's no upfront tax break. But in return, you get tax-free growth forever. Second, that money grows over time. Let's say Emily puts in $6,000 a year. If she does that from age 26 to 60, with average market returns, she could retire with over $1 million. And here's the kicker. She won't owe a penny in taxes when she withdraws it. It's like planting a tree now and picking fruit for life without ever paying the gardener again. So whether you're making $40K or $100K a year, this isn't just some Wall Street trick. It's a quiet, powerful tool that anyone can use to build wealth, as long as you give it time. Because with Roth IRAs, time is the secret weapon. How the rich take this simple tool and turn it into a tax-free empire. So, Emily is using her Roth IRA the normal way. Smart move. But let me let you in on a little secret. The wealthy? They're not just using Roth IRAs, they're hacking them. Meet Alex. He's a 35-year-old tech founder. His company IPO'd last year. Suddenly, he's sitting on millions and a massive tax bill. But Alex isn't panicking. Why? Because he's playing 4D financial chess. While most people think Roth IRAs are just for people with modest incomes, Alex used something called the Backdoor Roth IRA. Here's how it works. Normally, if you make too much money, over $160K if you're single, you can't contribute directly to a Roth. But Alex? He contributes to a traditional IRA first, then quickly converts it to a Roth IRA. Boom. Legal. Clean. Now his money grows tax-free forever. That's just the beginning. There's also the Mega Backdoor Roth. Yeah, it sounds like something from a Marvel movie, but it's real. If Alex's 401k plan allows after-tax contributions, he can pump in up to $66,000 a year, then roll it over to a Roth. That's 10x what Emily can contribute. And here's where things get really sneaky. Alex uses this strategy to avoid RMDs, required minimum distributions. Most retirement accounts force you to start withdrawing at age 73, whether you want to or not. But Roth IRAs, they don't have RMDs, so Alex can leave his money in there, growing tax-free until the day he dies, and even pass it on to his kids, still tax-advantaged. So while you're out here thinking a Roth IRA is just a small-time retirement trick, the wealthy are building generational wealth with it. But here's the truth. You don't need to be a millionaire to play this game. You just need to know the rules. And now you do. Let's take this knowledge and actually build your first tax-free portfolio, step by step. Okay, so now you know what a Roth IRA is, and how the wealthy supercharge it. But here's the real magic behind why it works so insanely well. Let's go back to Emily. Remember, she's contributing $6,000 a year into her Roth IRA. Nothing crazy, just $500 a month. That's like a gym membership, plus a few Starbucks runs. Now imagine she starts at age 26, and she invests every year until she's 60. Just by letting it grow, at an average return of 7% a year. Emily ends up with over $1 million. And here's the kicker. Every single dollar of that million, tax-free. That's not hype. That's compound interest, paired with zero taxes. The two most powerful forces in long-term wealth building. Let me show you something. Let's say her friend David invests the same amount, but in a regular brokerage account. His investments grow too. But each year, the IRS takes a little slice off the top. Capital gains, dividend taxes, you name it. Over time, those little bites, they turn into hundreds of thousands of dollars lost. It's like watering two plants, one in the sun, one in the shade. Only one grows fast, only one blooms. This is why time matters, and why starting early, even if you're not investing a lot, matters even more. Because with Roth IRAs, it's not about beating the market. It's about letting time plus tax-free growth do the heavy lifting for you. The longer you stay in the game, the bigger the reward. So yeah, maybe you're not rich yet, but give it 20, 30, 40 years. You'll be shocked at what steady investing and zero taxes can do. That's the secret sauce. It's not flashy, it's not sexy, but it works. And it's built for people exactly like you. Let's turn this knowledge into action and build your very first tax-free portfolio. So, after everything we've covered, you might be wondering, wait, can I even use a Roth IRA? What if I make too much money? What if I already have a 401k? Great questions. Let's break it down. First, income limits. If you're single and make under $146,000 a year, or married filing jointly under $230,000, you can contribute to a Roth IRA directly. No loopholes, no tricks. Over those limits, you can still use the backdoor Roth strategy we mentioned earlier. Yes, even if you're not a tech founder with millions in stock. Next, what if you already have a 401k through your job? Awesome! A 401k and a Roth IRA can absolutely work together. Think of it like this. Your 401k gives you the tax break today. Your Roth IRA gives you the tax break in retirement. Double the accounts. Double the benefits. Now let's talk real life. You don't need $6,000 sitting in your bank account to start. You don't even need $500 a month. You can start with just $100 a month. Seriously. That's less than most people spend on food delivery. The key is consistency. Set it. Forget it. Let time and tax-free growth do the heavy lifting. And starting is easy. Platforms like Vanguard, Fidelity, and Charles Schwab make it super beginner-friendly. Open an account in under 15 minutes. Automate your monthly contributions. And boom, You're building long-term wealth on autopilot. Still worried you're too late? You're not. Still think you need to be rich first? You don't. You just need to start. Because this tool, it was designed for people like you, people who want to take control of their future without being buried in complexity. So whether you're 25 or 39, earning 45K or 95K, this is one of the simplest, most powerful steps you can take toward financial freedom. Let's actually build your first portfolio, step by step, no jargon, no guesswork. Let's zoom out for a second. What have we really talked about in this video? We've uncovered one of the most powerful and underused wealth-building tools in America. You invest with after-tax dollars. Your money grows tax-free. And when you retire, you get to enjoy every cent without paying the IRS again. That's the Roth IRA. Simple? Yes. But don't confuse simple with small. It's a tax shelter for everyday people. It's flexible. It's accessible. And most importantly, it works. The rich love it because it protects their wealth. But you should love it because it can create yours. Remember Emily? She started with just $500 a month. Fast forward 35 years. She's sitting on over $1 million, all tax-free. That's not a dream. That's math, plus time, plus action. So here's the deal. The best time to start a Roth IRA was 10 years ago. The second best time is today. If you're ready to take control of your future, open an account on platforms like Fidelity, Vanguard, or Schwab. Set it up, automate your contributions, and watch what happens when time and tax-free growth work together. And hey, if you're opening your account this week, drop a comment that says, Roth Ready. Don't forget to like this video, subscribe to the channel, and hit the bell so you never miss a money move again. We've got more coming your way, because understanding where to invest is just as important as how to invest. Next up, how to actually build your first portfolio with these tools. It's easier and more powerful than you think.